Good afternoon, everyone, and welcome to Unlocking Your Angel Investor Potential, a webinar of the Schulich School of Business. We're presenting here today in partnership with the Indo-Canada Chamber of Commerce, and we have a star-studded panel, some interesting perspectives, many different ways that the people today come at angel investing, acquiring companies. There's a lot to learn, and we're going to have a lot of fun. I'm pleased to be joined today by my co-host for the session, Vijay Thomas, the founder and CEO of Tangentia. And Vijay, do you want to give yourself a quick introduction and a few words on behalf of the Indo-Canada Chamber of Commerce?
Thank you, Chris. My name is Vijay Thomas, and some of you that have been joining a bunch of our webinars over the last couple of months must have seen me. But today we're going to a whole new audience. So this is Indo-Canada Chamber of Commerce has been an organization that's been in the Indo-Canada corridor for the last 43 years. And this is the first time we're actually speaking to angel investment. And the hypothesis that we think there's a whole bunch of closet angel investors in the Indo-Canadian community that we want to bring out into the open. And for you to come out in the open, we think today is the day. You've got everybody that can on our panel today that can actually tell you how to go about doing this. And I think in the Indo-Canadian community, there's a lot of us that have aspirations. So, and that's, I think, what we wanted to do today. So thank you, Chris, for arranging and putting together this panel. And I think it's an honor and a privilege to meet a lot of you people on the panel. And we look forward to speaking with all of you.
Thank you, Vijay. And we are really excited to be partnered up with the Indo-Canada Chamber of Commerce on this. It really sparked from our relationship on Together 2021, which is a big session coming up in January between Schulich and between Startup India. And we'll get into that later, but that's how we met. That's how we got together. And Vijay had this great idea. Let's start to talk to people about the opportunity for angel investing. And maybe, just maybe, when we get to the finals of that competition in January, we'll have a whole crew of ICCC members that'll show up for the championships, and maybe they'll see something that they're interested in investing in. Now, when we had the opportunity to reach out today and put this together, we had Vijay. We knew he was going to be on the panel, but we needed to put together this star-studded group that we talked about. And the first person that we reached out to was Jeffery Potvin. I'm going to introduce him in a moment, but he'll be leading us through his keynote and then running the panels today. So we're excited to have him with us. Jeffery from Open People Network. We also have Benton Long from the Archangel Fund, exciting new fund that's just recently been launched in the past year plus. We have Galen Udell from York Angels, a great partner for the Schulich community. We'll talk more about that. We have Arjun Jasuja, the founder and chairman at Sigma Group, and he's got a lot of interesting perspective in terms of what he's been working on in over many, many years in the space. Vijay, as we said, and then my friend Mudit Rawat, the chief revenue officer at Planet Corp, Schulich alumni, and very busy working with many startups in the ecosystem. So welcome to all of you, and we're going to have a great time together today. Welcome to everybody who's watching on YouTube on the stream, or is going to catch this afterwards in a recorded session. If you have any questions that you want to put in the comment sections on YouTube, we'll see if we can get to them and share them back in with the panel as we go along. So let's continue right along and come to introducing Jeffery. As I said, Jeffery is the first person that we reached out to in terms of setting the table for us today and talking to us about the angel landscape. Jeffery is an active angel investor with more than 55 companies that he's invested in. He's with York Angels. He also is the founder of the Open People Network, a lifelong entrepreneur. Known him for many years. He's worked in the corporate community and the innovation community at places like Loblaw, Caboose. I think he and I first met at Loblaw many years ago when I was running my company. And he's also the CEO and founder of Hardboot Communications, a custom mobile web development shop. His work in the angel space and investing space spans the globe. He has many of his own interests happening in India right now. And so for a whole lot of reasons, we're really happy to welcome Jeffery to set the table as our keynote today.
Awesome. Thank you very much for having me today, guys. I guess community as well. I'm just going to share my screen. Can we see this good?
We're good.
Perfect. Well, thank you very much for having me again. And I'm going to kind of give a quick walkthrough in the landscape of how I kind of look at the details and the facts that really bind and work inside of the Toronto Canadian ecosystem, which we're all interested to learn about today. So at OPN, or the Supporters Fund, we are bringing entrepreneurs, investors, sponsors, business leaders, strategic partners together to create a community of sharing, inclusion, collaboration that facilitates and supports the growth and financial success of all stakeholders. So what is the problem, if you will, that we're looking at? Well, companies struggle to access early stage growth capital. It's common, it's an unfortunate event, and we want to be able to see if we can overcome that today and in the future. And angel investment is the most vital stage in their path to building a viable and successful enterprise. So how does it look and what do the numbers tell us? In Canada, there are over 118 accelerators and incubators that really get together to help drive out those early stage companies. There are over 44 plus angel networks. There are over 252 investment banks that jump in to support companies. There are about 5,000 new startups created yearly. And if you take the numbers and break them down with in the closet or just open angel investors, we're probably looking at the number between 22 to 3,000 angels in Canada. On a global scale, where does Canada fit into this innovation space? And it's really exciting. Canada has 6 cities in the top 100 most innovative cities in the world, which is a new record for the nation's diverse startup ecosystem. Toronto's ecosystem as a whole is ranked as number 24, and Canada as a general country ranks 4th in the world for innovation and startup communities, behind Israel, UK, and the US. And there are a lot of dollars that are being pushed into Israel, UK, and US. So Canada has really done a lot to become where they are today. When you look at what those ecosystems make up, there are over 412 ecosystems in North America alone, and Canada has 29 of those. So in going through and researching this data, Startup Blink reported that Canada ranked 3rd in the world for COVID-19 innovation, and Toronto ranked 4th in the world globally for all the work that they've been doing throughout this pandemic. According to PitchBook, investors continue to make a lot of investments and commitments into venture capital funds, despite the challenges that we've been faced. But what does this do as a whole ecosystem for how angel investors work? Well, pre-COVID, it was being registered, according to Hockey Stick, about $1 billion every quarter was being invested into early stage companies. And you can see the numbers have changed dramatically, but they continue to make investments through the last 8 months of COVID. And then to put this into context around where the VCs fit into this is that, which is venture capital, which is the layer above angel investment, they continue to grow and make a lot of deals come through. And in 2019, they had a record 6.2 billion in Canadian dollars invested over 539 deals. Now there is some crossover between angels and VCs on how they register the data, but just to give you in context, the size of this asset class. And with growing numbers of dollars going into these spaces, they have put a lot more dollars with high percentage growth into clean tech and life sciences. And all of these are making a big difference in how Canada is interacting on the global stage for early stage companies. If you pull this back down to the early stage angel investors, on average, there are about 5,000 startups that are produced a year, where you're seeing about 400 of those being funded in a pre-seed and seed round stage. And then that number starts to escalate through all the other series of investment throughout, with strong support from all the government bodies you can see to the left. So where does this put us, and how does this look for the companies that we want to invest or work with? Well, today in Canada, we're working with 75% of a male versus 25% of female founders. And why is this a significant statistic? Because I predict in the next 3 to 5 years, you're going to see the crossover of a 50-50 changeover of male viz female entrepreneurship. And why is this significant? Because in the past, this number has slowly started to grow. In the last 3 years, it has been doubling year over year. And we feel that female founders make a massive, massive change to this environment and really open up the risk factor for investors and everybody else to want to jump into this space because the playing fields are becoming so equal. It's amazing. So if you were to look at what are the reasons for these fails to occur in startups, if you will, there's two main ones that stand out. There's no market fit and they ran out of funding. And why do those two stand out the most? Because when it comes down to the whole reason why we're here today is we're talking about how angel investors need to get more involved, how angel investors need to find angel groups, be participating and helping early stage companies to open up that funnel. Well, this will show you again on how that funding breaks down. Most early stage companies are personally funded, bank loans, or they borrow money from friends and family. And again, that can go into notes, into other forms of investment. But you can see that from a crowdfunding and venture and angel funding side of things, that it is such a small fraction of where the dollars are coming to support early stage startup companies. And this is where we need to change that. So to give you an overview of the landscape and how the landscape is approached, there's many different sectors. And as we talked about earlier, you have different stages and you have accelerators, incubators, mentoring, coaches, and then angels and VCs. And here's just a simple chart of some of the different ways that this community is kind of put together. You have really early stage groupings from the Senecas, the Y Space, Fast Starts, Founders Institute, where they help early stage companies get off the ground. You have MVP launch, which is getting more into creative labs, Y Combinator, Techstars, where they're taken to that next stage. And then you're getting into funds and other events that help structure those companies and get them angel investment from the Archangel, Supporters Fund, Good News Ventures, and of course, this whole community around funding and angels is the next stage, which is stage 4. And this is where we have the 44 plus angel groups that have lots of members and a lot of people that want to sink their teeth into helping early stage companies get their feet into the space and start growing their company. So there is a bit of an angel process in how this works. And this is kind of more of a review to give everybody an idea of what they're getting into and why this is such an amazing space to be in. It's very simple. It's very clean. We can quickly walk through it, but I think in the panel, we'll dive into this a lot more. But what you can see is that it just starts by that startup reaching out to these angel groups, going through committees that are going to review the applicants to find what's going to better suit their groups. And then it goes into a larger screening committee. And inside of that screening committee, they then narrow down the applicants down to the best 3 to 5 companies. And then those companies get grooming, support, and help from the angels. And then those companies will then pitch and get in front of the larger investment community. And then they'll dive into the DD, which is really trying to do the due diligence and really understand what this makes this company tick, what are the valuable components to it, and how can this company grow and expand globally. And with that, all of these angels support and grow inside this process to help these companies. And as I mentioned, some of those layers all start through the bottom of this funnel where you have 5,000 startups, and all the way through they're interacting with incubators, accelerators, angel networks, all to get themselves to that MVP and to growing that company. And this is where we want to help drive more investment and get more angels involved because there are too many companies and not enough people supporting it. Consider this. Founders of previously successful businesses have a 30% chance of success within their next venture. Founders who have failed at their prior business have a 20% chance of succeeding versus an 18% chance of success for first-time entrepreneurs. So we need to get and support as many first-time entrepreneurs as we can to move them through the system, because the value comes in creating jobs and creating businesses that will grow, sell, and then replenish themselves by building a new company. So early stage asset class, which is pre-seed and seed round investments, and you can even consider Series A, these are massive and a huge need in the market. It's a big asset class. It's comparable to the VC markets. And angels are investing billions of dollars annually across Canada and North America to help feed this ecosystem. It's been proven that with an angel investor spending more than 20 hours in DD and working with these companies, that they can improve that startup's chances of success. Because of the disciplined approach to due diligence, they can help find and shift and grow that business in ways that that founder may not have been able to structure themselves. And with angels diving into the portfolios, it actually provides a lot faster and more constructive value proposition back to that early stage founder and founding team. Angel groups yield a 22% realized IRR compared to VCs and private equity. It is a massive, massive asset class that really needs to have a lot more attention from high net worth individuals and people that want to give back to the community. So why invest in startups, angel groups, or funds? Because it's a managed process. There's portfolio diversification. Returns and upside potential are massive. And investors are a way to help navigate through the startup ecosystem to get them into a VC funded opportunity. And with that comes high risk and high reward. So I want to thank you guys for having me today and allowing me to walk everybody through kind of the vision, if you will, of the angel network and what we're trying to do to help grow and build more successes in Canadian economy. Thank you.
Excellent.